YouTube. Okay, good morning and welcome to another episode of the Crypto Hour. Today, as usual, we will having a look at the economy first, and then a very exciting happening in crypto, and especially some examples of the things that we were talking about last week as well. Okay, so let me start sharing my screen. Okay, can you see my screen? Yeah, fantastic. Okay, so this week we had a few examples of what we were talking about, the macro tightening lag kicking in. Okay, so that's the results in the real economy of the decisions taken very many months ago now, about 15-16 months ago. So what we have noticed, if you look at again we start from the economic calendar, we have noticed weak purchasing manager index numbers both in Europe and the US, and especially in the US we had the jobless claims that keeps let me see, we don't have it actually. Let me go out to the my FX books are a little bit more detailed. Sorry, just hang on a second. Filter a little bit. Okay, and this week. Okay, so as you can see here, for example, the number to look at is this one, the continuing jobless claims. So the initial means the new people they are claiming for for support, but this one is the people, because what we don't know is that we can see the number for new claims, whether it's higher or lower than last month, but we don't know how many people there were claiming benefits the month before are gone back to work. So this is the number to look at, the continuing jobless claims, and you can see now it keeps trending higher, and it is about now 500,000 more than it was at the low in 2022. So these are more people that are out of work basically. So that is starting, the tightening in the economic policy is starting to be felt in the real economy. And that was yesterday, by the way. Today we are kind of like the good news in the UK that the quarterly growth rate is 0%, and that is good news because the market was expecting actually the UK to go into a recession, with a negative number this month, but we just about scraped, and another stagnant economy. So we have this kind of, within this backdrop, we got to consider what happened in the, if we look back at the previous crisis, the previous recession, and what followed, what kind of decisions were taken at the time, what followed, and if the same thing could happen again. So let me just change a little bit. So the past couple of years have been pretty grim from the point of view of investing. Okay, so we had this in this graph. You can see on the right hand side we have had a tightening on the bottom or easing in monetary policy, and at the top we have growth. Okay, so on the right hand side we have growth accelerating, and on the left hand side growth decelerating. Now most of the time we have been into the bottom quadrant. Okay, so where the hawks are in control, so with expectations the monetary policy is going to get tighter and tighter, the interest rates are going to be raised, and so on, and we had that up to very recently. We had that not just the numbers, but also the officers from and the people that are involved in the monetary committee, from Powell down. They've been talking about the need to keep the inflation under control, to raise interest rates, and even now maybe with another interest rates might be coming. But at the same time we're starting to hear noises that maybe the tightening has been enough, it has affected the economies enough, and we don't need to tighten anymore. But these are the kind of, like, depending on what the growth is like, and what the tightening is like, there are different sectors that we can kind of like invest in, and most of the time, the past year and a half, we've been in this bottom corner. Okay, so really the best thing to invest in was the dollar, and partly some commodities. But the main narrative was to just get out of stuff, okay, because the investment arena wasn't very well priced, in the sense that taking risk was very expensive in terms of the rewards that were possible. Okay, so that was the main strategy, and and we've been twigging between the two bottom quadrants, because of this expectation that everything is going to turn out all right. Okay, so the good investment in more recently has been US value stocks and emerging markets equity, which if you can see, this is like the healthy tightening on when there is a tightening of the monetary policy, but at the same time continuing growth. Okay, and this is more evidence in emerging markets than it is in established markets. But this is kind of like the Goldilocks scenario, that everybody is hoping that will happen. This time, kind of like it will be what they call a soft landing of the economy, where we keep growing, and at the same time inflation is under control, etc., etc., etc. Okay, so where everything rallies basically. Okay, so equities, bonds, everything else is everything is going up, and this is what happened sometimes in the past. But you probably have heard about the 60-40, 60% equity, 40% bonds, kind of like investment. And this is more the kind of investment that you do where, there is monetary easing, but the growth is going down, is decelerating. And so that's when gold is king. Okay? So at the moment we are between these two quadrants, and everybody is still hoping, almost like without any number supporting the hope, but everybody's hoping that we're going to morph into this quadrant, okay, with a new push and a new good results in different sectors in investment assets. Okay, so this is the kind of returns for the past 10 years of different asset classes. Okay, so we can see large cap stocks, small cap, mid cap, real estate, investment trust, and so on, international stocks, and so on. This is the treasury protected securities, like inflation protected bonds, and so on. Okay, and as you can see, this changed quite dramatically depending on the time. Okay, in 2018, this is the closest example that we have, is when tax cuts, during the previous president in the US, the orange guy, Donald Trump, there were a stimulus, there were tax cuts, and so that pushed economic strength, and as a result, then the Fed started increasing interest rates. Now, this increase in interest rates wasn't bringing the results they were hoping in terms of slowing down the economy, so they tightened even more. Okay, and so what happened then is that at the beginning of 2019, so we see what happened in 2018. Okay, so everything went down pretty much. There was quite a big. This was caused by the tightening, where we had basically stocks. They had a 20% drop in the last quarter of the year, to the point where Powell from a hawk turned into a dove. Okay, so he started talking about easing. Okay, and the result, then the Fed started decreasing interest rates in 2019, and that caused a huge rally. into everything. So 30% increase or large cap stocks, even mid cap and small cap were above 20%. Real estate, 30%. So a real good year for investing. Okay. Now the two things that need to happen. So we're thinking, could the same thing happen again in 2024? Okay. So if we had this tightening cycle, could there be then a change in stance of the monetary stance, and as a result we would see another good year like in 2019. Now there are a couple of things that we need to consider for that to happen, and things that are different between where we are now and where we were in 2018. Now what's different is that so we need to consider the labor market and inflation. Okay, if we see where the labor market is at the moment, as I said, there's hardly any hiring going on. Okay, in the manufacturing, financials, transportation, construction industries, but it's not a desperate situation. So it's a similar situation that we had in 2018 before the crisis. Okay, but this is the condition. It was similar to what we had at the end of 2018. Now, if we can have a look here on the quits rate, so how many people quit their job, and move to another job. At the moment, this is at a very low level, less than 3% now, 2.6%. And also as a result, because people are not, so that means that the labor market is not very active. People are not leaving their job to go to a better job, and as you can see, the pressure on wage growth as well has gone right down. So the wage growth is now expected to grow at just above, again, about 4.5%, compared to the expectation last year of being above 6%. Okay, so that tells us that the pressures on the job markets as well at very low. But what's the difference in situation? The other main component of this, so the job market is pretty similar situation. It's bad, it's stagnant, and but it's not in crisis quite yet, although the numbers are getting worse every month. But what about the inflation? Okay, before we talk about inflation, this is another indicator that this is an economist, Claudia Sam, that produced an indicator of what precedes a recession. Okay, and the indicator that is produced is a moving average of the US unemployment rate minus the previous 12 months lows. And when this indicator, which at the moment is at 0.33%, is above 50%, then a recession follows very, very quickly afterwards. We're not quite at that level yet. We will need a couple of more kind of like bad months in employment numbers to bring this moving average above the level of 0.5. But it is, as you can see, is being progressively getting the numbers being progressively getting closer to that. So we could be seeing again a signal soon in the next couple of months for a recession to follow. Now, and here we see the kind of like inflation figures. What we were in 2018, inflation was under control. Okay, so it was below 2%. So Jerome Powell has two jobs. One is to keep inflation, within the target rate, which is below 2%, and the other two is to facilitate the job, creation. So while inflation is still above the target, his hands are tied in a way, because At the moment, as you can see, there's a difference from 2018 when inflation was below 2%. Now we have a sticky part to inflation, which is difficult to get down, which is at the moment around 3.5%. Okay, so to have an easing situation, we would have to have a inflation is back within the target, so it's not overshooting. Okay, and that could cause, if let's say for some reason inflation quickly goes below 2%, that could give the kind of the green light to the Fed to start easing and to start reducing interest rates, and as a result then we would have that kind of like a boom in all like risk assets. So that is including then stocks, can be commodities as well. It can be real estate. So all the thing that people invest in to with the hope of making a profit. Now there will be a much higher likelihood for a profit to be made once the inflation rate starts going down. Okay, and what is the other? So these are the two scenarios that could happen. Is this okay? One is inflation, Goldilocks scenario. Okay, not too hot, not too cold, just right. And that's what we just discussed. So buy anything you can get your hands on, basically. Crypto, stocks, option, whatever you want to buy as a risk asset will do well. The other scenario though is the inflation is and these are the kind of the evidence that we are seeing at the moment. Inflation hits a wall in a way, and it stabilizes between 3 and 4%. Okay, and what would be the result then? The result of that scenario is that the Fed will keep saying we need to be tighter for longer. Okay, and in that case, that is the opposite of what we were talking about. So we're going back to this scenario here, because the growth now, which is kind of decelerating, and no prospect of a big rally in stocks. So really the idea would be just get out of stuff. Okay, and again the dollar and bonds are king in that scenario. So these are the two things that could be happening. So one the result of and this is why we look at these things, by the way, because the result of these things then are felt in the markets. So if I look, if we go back, so we'll look at Bitcoin in a moment. Okay, let me just look at some of the yields, for example, the 10-year yields. As you can see, this week we've had a rally in the market, and at the same time, what we were talking about, I've been talking about this for the past few months. As you can see, the yields in the 10-year treasury note have been steadily going up since 2020. Okay, so when we had pretty much interest rate at pretty much at zero, and they've gone up, and they touched last week, a couple of weeks ago, they touched 5%. So as you can see from then, and with despite, because they pay attention to what the officers say, for future attitude towards policy. As you can see now, the yield has started to go down. Okay, and so what did we say before? When this yield starts to go down, what's the other thing that goes up? Anybody remembers? The other thing that goes up is the price of bonds. Okay, you can see this is that's the price of the TLT, which invest in kind of like it's a fund that invests in long-term bonds. Went from went up 8% in a week. Okay, so this is what could happen, and that's the price of bonds, or where we were in 2020. Okay, price of bonds was 170. This is the 20-year treasury bond. The same thing that was valued at 172 now is valued at 87.50. I'm not saying that we go back up there anytime soon. Okay, but if you can imagine, how much would you pay to have a 5% bond when the interest rates at back at 2 or 3%? You pay more than the face value of the bond, because you can't get those kind of interest anywhere else. So this is why there is the inverse relationship between yields and the price of bonds. This is all the time the yields were going up, the price of bonds was coming down, and now yields have started to come down, the price of bonds has started going up. So it wouldn't be a bad place to have some of your money in something like this, which, by the way, you can buy through your broker. These funds, these ETFs are quoted in the stock exchange, so it's easy to buy and sell them like a stock. And if you look around, there's also some leverage ETFs as well that have the kind of directional bull bond ETFs that can give you 3 times the returns, if obviously 3 times the returns if the things go well for you, or 3 times the losses if things go bad. Okay, so be careful with those things, but definitely is one of the things that we can look at. Okay, on a different thing, let's go back now to Bitcoin. Okay, and again, this is, as what I've been telling you this past few months. We get all these impulsion phases. Okay, when there's a big jump in price, and you can see then we've been on a quite linear trajectory from November 2022. Okay, so we more than doubled in price, from 15.5 roughly to now 38,000. But what did I tell you? That as soon as we broke this blue box, very quickly we get up to the orange one. Okay, and you can see yesterday we go up to about 38,000, which is within the next area where the charts are telling us there is some supply waiting. So there are people waiting to sell at this price. Okay, and so the same way that we go into this blue box and then we spend quite a bit of time in there. Now we probably will see penetrating, like next time the price gets to 38, it will get a little bit deeper, and then we will see price probably hanging on in this zone until there's another catalyst. Okay, and this is all, by the way, rumors about the spot Bitcoin ETF and nothing else. Okay, so that's what has caused this surge in price. And if you don't believe me, you can have a look at it on the Ethereum chart. And this is yesterday. Okay, what happened yesterday? They went from 1880 to 2130, so 13% in a day. Okay, so what happened is that it was announced that BlackRock has now filed for a Ethereum spot ETF. So again, it's rumors about an investment. But what happened? This is what I wanted to show you. Where are we? Do we have the market cap? Sorry, just a second. Okay. What do I get? I forgot where I get the market cap graph. Anyway, doesn't matter. So what we had here, just yesterday, we had an increase in the market cap of about 50 billion. Okay, and to cause that increase in value, so basically in prices, it doesn't mean that 50 billions have been invested in crypto. It's the actual price to move the market by that much was about, new funds, about 500 million hit the crypto market, and that caused a 50 billion increase in valuations. Okay, so it doesn't mean the 50 billion were invested in the crypto market. It just means that now if you tot up all the prices of all the coins by the numbers of coins in circulation, you will get this figure of about 1.5 trillion. So can you imagine what happens once there is a Bitcoin and an Ethereum ETF, okay, that would allow people to, through the safety of the broker, to buy shares in Ethereum and Bitcoin, in effect. Okay, and all the money that goes into these ETFs, by definition, the ETFs are passive funds. Okay, so they got some specific rules, and so when you deposit money and you buy shares in the ETF, that money then needs to be converted into buying coins. And opposite, when you sell your shares or the ETFs, then coins need to be sold to then pay you your shares for your shares. So if we think at the moment, the market cap of Bitcoin and ETF combined is just short of 1 trillion. 1 trillion. So it's 20 times the move that we saw yesterday. Okay, or 50 million. So if you're thinking, 500 million. So if you're thinking that how much money could come to Bitcoin and Ethereum through ETFs, and I'm not talking about huge amounts. If you even think about, maybe just 3, 4, 5 billion, if you just multiply by what we are seeing this week, so multiply by 10 the time of increases that we've seen this week, and you get an idea, of what kind of prices could, some of these assets could reach in a very short period of time. So at the moment, the market is dominated by just expectation and rumors, really. Okay, but at the same time, what's happening because of these rumors, because of this expectation that, and by the way, comes from offices of investment companies as well, because now all of a sudden, BlackRock and Fidelity and everybody else have got something to sell, for people that want to invest in crypto, so they can make money out of crypto. They don't need to rubbish it anymore. Not yet, but the moment that the ETF will be approved, so they are starting to talk about it in different terms. And just a couple of things that I've just jotted down. So Larry Fink, the CEO of BlackRock, once referred to Bitcoin as the index of money laundering. Okay, now they're talking about it as digitizing gold and international assets, and also it characterized as a flight to quality as well in a recent interview. And also the director of Fidelity called Bitcoin exponential gold. So you can see how they, from right poison squared, to all the things that were told about cryptocurrencies, in talking about it in these terms, changes people's expectations and people's fear in approaching this asset class as an investment. This is why, we are seeing this. There is slightly a bit of, obviously all this is caused by rumors, but also by accumulation. Because of one thing, especially Bitcoin, one thing that is become clear over the past couple of years is that the old coins don't change hands very often. So people that buy Bitcoin don't sell it very often. They keep buying more and more and accumulating more in expectation for the next move. And by the way, if you're thinking, you're telling me, I don't know how you invest your money, okay? But I'm just telling you what can happen. All these boxes, the green boxes, are pretty much about a week. Okay, so each candle is 1 day. So 1, 2, 3, 4, 5, 6, 7, 8. So it's about a week each, or even less in some cases. Okay, so you tell me where you can get these sort of returns. This is 38%, the first move. Second one, 47%. third one 26%, and the fourth one, which by the way, if you've been listening, I had actually warned you when this was happening, when we were actually not quite at the bottom, but when we were about 28,000, it's 32%. So a lot of people always ask me, "Oh, is it too late to invest in cryptocurrency? Is it too late to buy Bitcoin?" So yeah, you need some courage to buy at this low, because you don't know if this is the low, prices carrying on going down. But even I would say a couple of weeks ago, you could have bought some and made 30% in a week. So obviously, yes, now prices are a lot higher. They're 30% higher than they were a couple of weeks ago. But I could envisage quite easily, price coming back to roughly to this range before making the next move up. So you can. I would quite, because it's kind of generally touches the previous, at the very least touches the previous high. So I would expect prices to come down maybe in the low 30s before moving up, unless the the spot ETFs get approved. Okay, now BlackRock is talking, so there should be one before the end of January. But we don't know, obviously speculation. Okay, speculation. But even the SEC are now changed its stance towards ETFs, and they looking like they're cooperating with all the companies that filed, to agree details before the ETFs are launched. Okay, so this is going to happen. It's just a matter of timing. So this smallest of these moves has been 25%. I mean, if you can get 25% in a week anywhere else, with something that, even if it doesn't go well as you expect, it's an asset that in history has grown, at, over 100% a year on average, then, let me know, because I'd be interested to hear about it. But at the moment, this looks like, as a very, very interesting proposition as an investor. And you can see also that the pace of growth, just obviously things don't go up in investing, in pricing, they don't go up in a linear fashion. So things will go up, come down, go up, come down, go up and come down. But you can see that this trend, this line, this orange line, that the links where we were at the bottom of the market to where we are now. So the pace, the average pace, or you can consider the orange line as the average pace of the growth, has been very linear. Okay, so you can almost like just use this to think about, okay, where will we be in March of next year? 44,000. Okay, and this is just linear growth without any particular excitement. So even before the Bitcoin does the halving, at the end of April next year, we should be just short of 50,000. Okay, so again, what are we talking about? Where are we now? Now we are at 36 and a half. 36 and a half to 48. 14, let's call it 48. Okay, it'll be another 30% from now. So these are the things. Even if unfortunately we can all invest at the peak, sell at the top and buy at the bottom. But our concern when we are buying or selling is that, okay, am I buying at a good price, and is there a prospect of being able to sell this as a higher price, or the other way around if you're in a bear market? Okay, so for me, the prospects of cryptocurrency in general, and I use Bitcoin as because it's in a bull market, Bitcoin is like the old guy or crypto, so it's very slow compared to anything else. So if you see this kind of increase in Bitcoin, then you look at other cryptocurrency, what the so-called altcoins, and the curve, this orange line will be much steeper. Okay, but it will be much steeper both when they when on the up, but also on the down. Okay, so if Bitcoin goes down 50%, the other coins will go down 80 or 90. Okay, and so on. So there is, I would consider the altcoins as leverage investments. Okay, so we can give you high returns, but at the same time can give you higher losses. So whenever you are thinking of doing of investing, you always have to manage your expectation and compare them to the risk of losing your capital. Okay, so in any case, only invest in any asset class, and crypto is one asset class, only a percentage of your investment portfolio. So have several asset classes in your investment portfolio. Crypto can be one of those. But definitely, I'm thinking just increasingly is an asset class, and I'm not telling you exactly what to buy, but I think it's an asset class that you should hold a proportion of in your portfolio. Okay, so okay, let's go down from the from this. We'll go down to a few news and some interesting things. So this is the announcement that we had. You see, November the 9th. So there was a filing for a new Ether ETF from BlackRock, and as you can see, the coins will be held by Coinbase. So this, let's have a look. Actually, have another look at Coinbase. Let's have a look at what the result of on the price of Coinbase has been, and as expected, again, 84 was the low yesterday, up to on Wednesday, the market closed at 88. Okay, and then it opened. Let me see, what am I looking at? So that was Wednesday. Yeah, this is Thursday. Okay, so then yesterday he actually opened up. There was a big gap from 88 to 92, and then he went all the way up to 99 and came back to 92. Okay, but so between where it closed on Wednesday and the high that hit yesterday is it's quite a lot. Again, just show you. This is 13%, and this is in a publicly traded stock. Okay, so you could have made really like 13% in a day, or if you have been even more savvy, you can make up to 17% if you actually manage to buy at the bottom and sell at the top. Okay, which is very difficult, by the way. But if you're thinking that's the range, then any buying of Coinbase shares could have given you a good result even on the day yesterday, because the news were known before the open. So if you manage to buy at the open, and you could have made 6-7% just in a few hours. Okay, because the market, the stock market in the US is open 6.5 hours, so not bad. Like 1% an hour. It wouldn't be a bad result. Okay, so apart from that, couple of interesting news. This is not necessarily like crypto based, but this is interesting. This is the co-founder of DreamWorks, and he's talking about the reduction in the labor for animation. And this is the people that brought to you Toy Story and all the other wonderful animations that DreamWorks worked on. And it is quite interesting to understand the kind of effect that artificial intelligence will have on the job market in many different in many different industries, especially we're talking about the creative industry here as well, and what effect could have on on our way of living, as many jobs pretty much will become just it will be done by AI, so there won't be any need for certain skills anymore, and so it will be a massive hit on many people that will need to retrain, to learn to do something different because their job has become obsolete, and there is a machine that does it a lot more efficiently and a lot cheaper. That's the word, and so it's interesting to see, because this is one of the things, that you would have thought is more, the creative industry. There will be less, subset to that, but obviously it's not. So if that can be done by AI, what about more repetitive industries, template-based jobs, or accounting or something like this? How many things can be done by an AI program at a much cheaper rate and with better results than a lot of humans doing the same thing? This is instead a bit of crypto news, which is, again, could be massive, could be. It's not yet happened, but Roblox, which, if any of you have children, Roblox. I don't need to say anything else, okay? Both as a physical game, but as an online game as well. And we all seen, our children playing either Minecraft or the Roblox version of it, so there's what they've been talking about is the potential of having NFTs into the Roblox game, so that it can be taken in and out of the game, can be sold independently by the game on an NFT platform. And so they can see this as the future, okay? And we always said, for the past 2 years, I've always told you that gaming is what will bring the masses to crypto, okay? Because as as gaming developers include crypto aspects, because many of these, for example, Roblox have got their own currency, okay? Whether it's not a cryptocurrency, but many other games will have, we all know Axie Infinity. They got the their currency is the Sweet Love Potion, that especially in Asia is even accepted in the shops. Many places you can buy grocery in the Philippines with Sweet Love Potions, okay? Believe it or not. So this could be massive for NFTs and for the crypto market in general, because of the new users that will bring along. Excuse me. Okay, other news. Circle is the issuer of USDC, and also I don't know how many of you have ever used USC, so the USD, sorry, the stablecoin for the euro, which is also issued by Circle in much smaller quantity than USDC, but it's still available, for people that want to hold cryptos in stable coins in euros. And they've created a new version of coins that will reduce the gas fees and cost less to transact. So this will be interesting, as all crypto projects need liquidity. And at the moment, the USDT, USDC are dominating the stablecoin market. So anything they can do to reduce costs is welcome. A couple of big news. I mean, I don't know if any of you have been involved in Celsius. When it went into bankruptcy. Any of you had any funds in Celsius? Now the bankruptcy is being ended by the courts, with approval to return some of the funds. About 2 billion funds will be returned to users, and partly they will repurpose the company as a Bitcoin miner and give the creditors shares in the new company that will be created, with the idea that this new investment then will grow and will allow Celsius to pay the debts back to all the people that had funds in it. So if you have if you did have a Celsius account with some coins in it, and which at the moment you can't touch, make sure that you log into the account and update your records, because you might start receiving something. Won't be much to begin with, but it's something is better than nothing. So make sure you do that. And this is this is another article still about the Celsius get approval to pay back 2 billion to creditors. Okay, and new shares new shares in this new company as a Bitcoin miner will be then distributed to creditors. Okay, they expect to start the reimbursements by the year end. Okay, so it's a good time now to update your records if you have an account for them. And if you see what a kind of like a long-term investment, we're also talking about Bitcoin being a foundation asset that you hold for a long time, and who better than this, to demonstrate this than MicroStrategy. Now, MicroStrategy kept buying Bitcoin at different prices at different times. Some of the coins they are bought at higher price than Bitcoin is now. Some of them they bought them at a lower price. But if you can see the average price for the Bitcoin purchases is about 30,000, 29,500. Okay, so now with the price at about 38,000, obviously that shows them a massive increase of 23% just now. Okay, so they kept. This is the attitude that many Bitcoin investors have. So over all this time, when Bitcoin went from 69,000 to 15, they did not sell a single Bitcoin. They kept buying more, kept buying more, they kept buying more. Okay, so last year he looked like an idiot, and you're still buying Bitcoin at 36, 37,000 when the price was coming down. Now he looks like a genius. It's just that. It's just having an idea. It's not that Michael Saylor is a particular genius or is a particular idiot. It's just that having an idea of what something is going to do in the long run, can having a purpose, having a goal, will make things in investing a lot easier, because if you understand what you are buying and selling, and you can forget again, I'll just show you this. You can forget all the noise. All this price going up and down is noise. All you have to care about is the direction of travel, and the kind of like the inclination of the speed or growth. Okay, so this orange line tells us how, on average, how we are growing, and the more, the steeper it is, then the better the better the prospects are. Okay, but that's the thing we should concentrate on, and this is what the things that Michael Serra is looking at. So this is a daily chart. What about if we go into a weekly chart? Oops. And you start thinking about, okay, where did we come from in 2017? Where are we now? Where could we be, aiming for? However way you want to, you want to draw it, will give you different results. But still, we still started from 2,700 in not that long ago, only about less than 5 years ago, and now we are on 36, 37,000. Okay, so this is what I am talking about. Okay. Other things. This is really interesting. Now, this guy here, for those of you that are not in the States, is the U.S. House Majority Whip. Okay, Tom Emmer. So he has introduced amendments to restrict the SEC from enforcing actions against the crypto industry without clear congressional authorization. And this is kind of like big slap to the SEC, big slap. Okay, these amendments were passed unanimously by everybody. So they are basically, what are they saying by passing this thing without even arguing between Democrats and Republicans? Is they're saying you mind what you are doing because you don't have authority to do what you're doing right now. We are the ones who make laws, and you are to apply the laws that we decide on, not the other way around. You don't make the laws as you go along, but you need to obey what we decide. And so that's good from one point of view, because it stops what the SEC has been doing to keep the crypto industry down. But at the same time, it's saying clearly that we are going to put some regulation in place. Obviously, we're going to decide what the regulation is going to be like in Congress, but there is a strong understanding now that regulation is needed. Okay, so this is what they're going to work on, which is a very, very good news in a sense. Although nobody likes the idea of regulation, hopefully it's not going to be overbearing. But at the same time, once you have a clear regulation in place, you know what it can and cannot be done, and things will move on from there. Okay, and as you can see, from the biggest investment companies in the world getting involved in crypto, I don't think we are looking for a politicians that will go against that, because politicians need money, need to be funded, and these people have got the one thing they have got. They got a lot of money. The Fidelity, BlackRock, together, with the main 5 to 10 investment companies, they have about 27 trillion under management. That's a lot of money, a lot of money. Okay, so bear that in mind. So there's not going to be something that will stop crypto in its tracks. Okay, they will regulate it, fine, which I think it's probably overdue. But there'll still be crypto in 2, 3, 5 years time. And this is kind of like an example where things, places that are more forward-looking. Taiwan now issued the first license for a security token offering. So this is a proper security. Okay, similar that you could have a bond, a US issued bond. This is a security. It is going to be issued as a coin, as a crypto coins. Okay, security token. So this is going to have a specific. So it's like a 3.5% annual interest. I don't know what this bond is going to be like, but it's significant that these are authorities that are starting to dip their toes into the blockchain world. Okay, and if this is happening now, I mean, Taiwan is a serious economic power. Okay, and as we know, obviously, big producers of chips. So it's significant that something like this is happening in places like Taiwan, like Singapore, and so on, because this is what could happen when there isn't a lot of red tape, around it, or where the authorities know what they are doing, and they start applying the rules in a logical way rather than trying to keep the money people happy. Okay, by doing things against the the benefit of the population. Okay, so I think it was the last item that I want to share with you, and we're also gone a full hours again. So what about any questions? Would you like to ask me anything? Eric, go ahead.
Morning, Luca, can you tell me or Jonathan what is going on with A starter?
Jonathan, I will. This is very exciting things, by the way. Jonathan, you got the mic.
Hi, everyone. Yeah, A starter is starting to move now, which is good. So we've seen a couple of bits of news recently. They were at the Cardano Summit in Dubai, and had taken along a demonstration of their latest decentralized exchange. So that's now just coming to the end of its external audit by Certic, who Lucas talked about in the past as one of the largest audit companies in crypto. And their code seems to be healthy, so that's good, which means that we could be due for an imminent launch. I was half expecting it to be announced at the summit, but no direct news yet. But that seemed to be the case for several different things. One thing that they've announced. Am I allowed to say this yet? Let me just check for my memories. Yeah, I think we're right. You can have a look on DeFi Llama, which is the aggregator for price indexes in Cardano. At the A Starter project, it's now sitting, I think it was 6th or something of all the total value locked in projects on Cardano, and they haven't launched yet. That's because Emergo, the founding entity, one of the 3 founding entities of Cardano, has backed them. They sort of helped them with the development all along. And they've sort of committed to a large chunk of liquidity, which means that the exchange will launch with a good amount of tradable assets. So that's 6th. Thanks, Luca.
Okay.
So, with the largest project on Cardano having 60 million in it, A Starter already have 14 million. Indigo have been around for a year or 2. So, they're coming in strong, which is really, really good news. Their token launch for the AA token has not got a date yet still, but they are putting in place some staking reward mechanism or aggregation mechanism. So if you are invested in the pre-launch at all, that Luca helped set up, then get onto my Discord or to the Opportunity DAO Discord, and there's bits of news on there. There will be a release of a form where you can sign up for additional staking pre-launch, because we've had such a deferred start of the project. There's going to be an opportunity to get in a bit earlier. So A Starter's looking good, which is exciting news.
So just to put it into context, for those of you that don't know it, A Started is a layer 2 project. So it's a DeFi project that is launching on Cardano. Okay, as a community, we actually created a DAO, an investment DAO that some of us have contributed to, and we invested as a group into A Started. So we're very much looking forward to the token generation event, which should have been at the beginning of the year, but still hasn't happened. But we all know these things are always like early stage investing projects. They have an outlook of at least 24 months, to come to fruition. So we're still in the kind of the first 12 months of the project, and hopefully we can have some good news in the near future. All right. And anybody else who wants to buy A Starter when it's launched, I will strongly recommend it. So we can bring the price up for everybody else. No, I'm joking. No investment advice, but we think the project, the project is good. We've had several meetings with, with the marketing manager, but also with other officers in the project, and it looks very exciting. And they all, as Jonathan will tell you every week, there is a lot going on in Cardano. So I recommend you to go and spend an hour with him at 9:30 every Friday after this, because if you got money to invest in crypto, the Cardano ecosystem wouldn't be a bad place to put some of it. Now, there's a question from Della. Bear in mind all this exciting new expectation of Bitcoin ETF approval and the potential of this to happen early next year. Well, it's you're talking about the dip. Could it happen or not? I mean, it could just be increasing. Yeah, we don't know. We don't know what's going to happen. But generally, you get the news, the news releases, and everybody gets excited. So you get that huge increase in price. 20% in a day or something like this. And then when there are no new, so you need a new catalyst for price to go higher. So you need for kind of new blood, new money to come in. And generally speaking, when this, there is no more, there are no more news or something, people get bored and think, well, price is not going anything, I'll take some profits. And this is why the dips happen. Okay, because just people that have jumped in the opportunity and they made money, they got like 20% maybe on paper, but they don't want to risk losing some of it, because most of these people, by the way, are leveraged. And when you get these moves, like the one, just let me share with you for 2 seconds, like the one that happened in Ethereum yesterday. Okay, when you get these moves appear, you see what's happening is that once price reaches a certain level, like for example, there would have been some stops above this price here, which was the July high. So there were people that were shorting Ethereum. Okay, then there is what's happening is that it's a increase in the pace, because these let's say stop losses with people that are sold Ethereum, when they hit the stop loss is basically, it's a market order to buy, to get them out of the position. Okay, so there are already lots of buy orders, and then you get more buy orders on top. So when you get these big moves, a lot of the big moves is down to liquidation as well. So there are people that were selling Ethereum to begin with, and they had to buy to get out of the position. Now, if you think about logically, what do most people do? They don't like being wrong about something. Okay, so somebody that maybe got burned because they sold Ethereum, I think, well, yes, it didn't work at this price, but maybe it will work at this price. This is why you see price that stops at certain levels that has reached in the past, because they're thinking, well, yeah, I don't know, I'm still think the Ethereum will go down, and they just move to the next thing. So I can't sell here anymore because price has gone higher, but maybe I can sell here. So then price kind of like stops and starts going sideways for a while, and some people get bored, and so this is why you get a dip, in price, because people take their profits. Some people think they can actually make money as price starts easing, and this is why we never have a linear move in financial prices. There's always like things like this. Things go up, go down, go up, go down, and then we declare, like we were seeing though, like if you see like in Bitcoin, there is a clear direction. Where am I going to 5-minute chart? There is a clear direction. If you look past the noise, then you can see what's really happening, what's being, where price is being pushed. And this is kind of like a year worth of, actually look at this, 21st of November was the low, and now we are on the 9th of November. So 12 days away. And in next time we meet next week is going to pretty much be a year. That would be represented by this orange line. Okay, so that tells you what's happened to the price this year. And if you just discard the noise, this is the net result. Okay, and that's the reality. We can never say what's going to happen from now on, because at any time there could be that approval of the ETF, Bitcoin ETF, and I would say there won't be a lot of selling in any case, even if nothing happens. But there might be, we're talking about prices they've gone up 30%, so you can expect maybe a pullback of about half of that. That's quite normal. So this is why I'm saying it's never good to buy at the end of a rally, or to sell at the bottom of a declining price. So if you are wanting to buy, then do it using limit orders, okay, at places that were significant in the recent past. This is what I would say. Okay, I will never go in. The only way you would do that, the only reason you would get in at a high price is when price is breaking, is making breaking new ground. So, for example, sorry, and just can you see my screen? Yeah. So if you see this, all this sideways move at a high and at a low, okay? Let me make a different color. Okay, can you see now this range? So another strategy that you can use, you know that once this range is broken, especially when this, for me, was when the blue range was broken, I would have been very comfortable to go long here and target this orange box. Okay, so it's not as big as getting this whole move, but it's still from 32.5 to 38. It's still a significant move, you know, about 20%, and with little risk, because we know that you know these areas here and here represents areas where the sellers were in control. Okay, and what happens when price leaves an area fast, like this one? It means there are some sellers that didn't get in on time. Okay, so what they think, well, next time prices gets to that level, I maybe can make the same profit that I missed last time. Okay, and some orders, actually, there are people that just leave their orders on the, you know, on the exchange at a certain price, and you know, even if the order was a few months ago, the orders may still be there. So we know that there were sellers here, and we know that there were sellers there. So it is. I mean, there's no security about anything, but there is a probability, a higher probability, that price will stall for a while, like it is in here. This is about a month worth of price action. This is again more than a month of price action, you know, from the 11th of May to 13th of June. So it's about a month worth of sideways action. This is even longer. So we can expect the moment that it breaks, you see how quickly it goes. And I've told you before, you know, this will take very little time to go from here to here, because not only you have, you know, a reason for price to break this, almost like this wall, but on the same time, you have these stop losses of people that were short hitting at a certain level above the highs. The stop losses will be hit. So there will be liquidations, and that accelerates this move. And there are no sellers here in between the orange box and the blue box. As you can see, there's a price came down almost like a stone. So there are no sellers left behind. And this is why price didn't spend a long time here. It just went up to the next price attraction point. Okay, which is up here. You can see how it works as well. You can see price yesterday, it went all the way up there and then got rejected. So this is, you know, 38,000, and we are now at 36.5. So again, it's a significant move, $1,500. Okay, and this goes up and down like this very quickly because there are sellers waiting at these prices. So you can use it as a target if you are coming from down below, if you're buying, because, you know, and you can do it several times as well. So you can, you know, buy, then sell when you get up here, then buy again when there is a retracement, and sell again. You can do that a few times. If we have a period of like this, or price going sideways, you can play ping pong, buy sell, buy sell, buy sell, buy sell. You know, and as long as you go in the direction that you expect price to go. So I wouldn't be comfortable, although I have done it a few times for, you know, on a short term, but I wouldn't be comfortable in this scenario to actually short, because you're going against the tide in a way. You're going against the trend. Okay, but I'm perfectly happy when price comes down to, you know, to lower levels where I think that there's going to be some demand waiting. I'm quite happy to, you know, to buy more and sell some more. So even if you don't just make it for profit, but to accumulate more, you can start with, let's say you started with 1 Bitcoin, and by the time you play this game 4 or 5 times, you know, you can end up with more than 2. Because just I've told you these are all like about 30% moves. Okay, you do it kind of like a few times, and reinvest in the funds that you generated, and quickly mounts up. Okay. Anyway, so I've gone way over today, so it's 9:10. Let me stop sharing, and it just left to wish you all a fantastic weekend, and please. You got about 15 minutes to use the facilities and make yourself a cup of tea or coffee, and go and join Jonathan. Just very quickly, just put the link in there. I think most people here are already in your Discord, but in case you're not, that's the link in the chat box, and it starts at 9:30 every Friday. Okay, so. Goodbye, everyone. And this time especially, I think Jonathan will talk to you about I imagine a little bit about the Cardano summit and bits of news that came from the summit. Okay, so go and enjoy. All right.
Thanks, Luca.
No problem. Goodbye, everyone. Have a great weekend.
Thanks very much. Bye bye.
Bye.